Welcome to Smart Money Insight, your trusted guide to financial freedom. Here, you'll discover practical money tips, proven financial strategies, and smart insights designed to help you save smarter, invest wisely, and grow lasting wealth. If you're serious about taking control of your finances and building a brighter financial future, you've found the right channel. Subscribe now and hit the notification bell so you never miss the latest money-making and wealth-building content.
Did you know that nearly 70% of Americans have never invested in the stock market at all? That's right, despite living in one of the most developed financial systems in the world, most people are sitting on the sidelines. They're missing out on the growth of the market and letting inflation eat away at their savings. In this video from Smart Money Insight, you'll learn exactly how to start investing as a beginner, even if you have very little money. If you've been searching for beginner investing tips or wondering how to invest with $100, you're in the right place. Welcome back to Smart Money Insight, your home for practical money tips, personal finance advice, and beginner investing strategies. Today we're talking about the best way to start investing as a beginner. Investing is one of the most powerful ways to grow your wealth, beat inflation, and reach financial independence. Yet for many beginners it feels overwhelming. By the end of this video you'll understand the basic investing concepts and the simplest strategies you can start using today, even with a small amount of money. Let's start with the problem. Most beginners see investing as a complicated, high-stakes game reserved for Wall Street professionals. They're worried they'll pick the wrong stock, lose everything overnight, or get buried under jargon they don't understand. They've heard horror stories about market crashes or scams. As a result, they leave their money in a checking account or low-yield savings account that earns next to nothing. The fear of losing money ends up costing them far more in lost opportunity than any market downturn ever would. Another misconception is that you need thousands of dollars just to open an account. That used to be true decades ago, but not today. With modern investing apps and brokers, you can open an account in minutes with no minimum deposit and start learning by doing. Understanding this is the first step to investing for beginners. So what actually is investing? Let's break the basics down into simple pieces. When you buy a stock, you're buying a tiny piece of ownership in a company. If the company grows and becomes more valuable, your piece becomes more valuable too. Stocks tend to be higher risk but also higher return over the long term. Bonds, on the other hand, are like lending money to a government or corporation. They promise to pay you back with interest. They're usually lower risk and lower return. Mutual funds and exchange-traded funds, or ETFs, are baskets of stocks or bonds managed by professionals. Instead of buying one company, you're buying a whole mix at once, which reduces your risk through diversification. Think of it like a fruit salad instead of just one apple. These three ingredients, stocks, bonds, and funds, are the basic building blocks of most investment portfolios. You don't have to master every detail to get started. You just need to understand the broad categories and why they matter. Now, what's the best way for a beginner to actually start investing? Here's the key moment. First, start with a budget. Decide how much you can comfortably invest each month without hurting your day-to-day finances. It could be as little as $20 or $50. Consistency matters more than the starting amount. Second, use beginner-friendly platforms. Robo-advisors such as Betterment, Wealthfront, Acorns, or your local equivalents ask you a few questions about your goals and risk tolerance, then automatically invest your money in a diversified portfolio. This takes the guesswork out and keeps costs low. Third, diversify from day one. Don't put all your money into one hot stock you read about online. Spread it across different companies, industries, and asset types. The easiest way to do this is through an index fund or ETF that mirrors the whole market. Fourth, think long-term. Investing isn't a get-rich-quick scheme. It's about letting time and compound growth do the heavy lifting. Even small, regular contributions can grow surprisingly large over decades. Imagine investing just $100 a month into a broad index fund earning an average of 8% per year. After 20 years you'd have about $59,000. After 30 years you'd have over $130,000, all from slow, steady investing. The great news is that you don't need to be an expert to benefit. You just need to take that first small step. Open a brokerage account or a robo-advisor account. Set up automatic transfers from your checking account. Start with a diversified fund. As you gain confidence, you can learn about individual stocks, real estate investment trusts, or other asset classes. But the most important thing is to start, because time in the market beats timing the market. Let's recap. Investing for beginners doesn't have to be complicated. You learn that most people never invest because of fear and misconceptions. You learn the simple building blocks: stocks, bonds, and funds. And you heard the best beginner strategies: set a budget, use beginner-friendly platforms, diversify, and think long-term. Starting small today can lead to great outcomes tomorrow. Even if you can only invest a tiny amount right now, you're building a habit and harnessing the power of compounding. Now I'd love to hear from you. What's your biggest question or fear about investing? Have you tried investing already, and if so, how was your experience? Drop your answer in the comments below. I read every one. And if you want more smart money tips and beginner investing advice, check out my other videos right here on Smart Money Insight. Don't forget to subscribe so you never miss an update.